The Wall Street Journal is reporting that the SEC is investigating Slack and other unicorns on the New York Stock Exchange. This probe will focus on how trading was handled on day one and other issues as well. For more on this, let's welcome former SEC Chairman Harvey Pitt. He is now the CEO of Kalorama Partners. And Chairman Pitt, thank you for being here today.
It's my pleasure.
How should we read into this? What do you think's happening?
Well, I think this is a very logical extension of the Commission's staff's concerns with how IPOs and other preliminary offerings are being handled. In particular, I think they're worried about how price determinations take place, the independence of those who tend to be the designated market makers and the like, and making sure that all risk disclosures are fully disclosed.
Have you been concerned with what you've seen in the IPO market this year?
I think there are some questions about how the process is operating. In the area of direct exchange listings, which is what Slack and before it Spotify reflect, there have been questions about how the pricing was determined. And those questions, I think, are difficult to answer without conducting a thorough investigation, which appears to be what the SEC is doing.
Tom, you ran the NYSE. What do you think?
To say I'm close to this situation is a bit of an understatement, because I worked with my colleagues to help design the direct listing, and I was involved in many of these IPOs. So I have to be a little bit circumspect. First of all, the report in the Wall Street Journal over the weekend really said nothing. I don't know if you read it. It had this very prominent placement, but it said, oh, the SEC is investigating. What I suspect, and I have no firsthand knowledge, what I suspect they're investigating is what happens before a listing transpires. I doubt that they're investigating is the correct price, the price at open, because when you look at the Spotify and Slack direct listings or many of these IPOs, they trade very, very smoothly on the New York Stock Exchange. More smoothly, in fact, than pretty much any exchange in the world. But what happens before is a little bit of a black box to the investing public. It's, Goldman Sachs and Morgan Stanley do an incredible job on these big IPOs of balancing orders, buys and sells. But the process of how do those orders make it into the book? How is that communicated to the public? And I think it's healthy to look at that and to say, are we doing the best job possible? Are we providing the most transparency? And with the advent of direct listings, now's the time.
Sure.
So I viewed it as largely a good thing that the SEC is looking at it. But I want to just reiterate, it's not clear what exactly they are looking at.
Well, Harvey, part of the question has to be the valuations that we saw in the private markets before. Clearly, some of those valuations were just in nosebleed territory and didn't deserve to be there.
Yeah, I want to make it clear the SEC wouldn't be looking into what the correct valuation was or anything of that nature. That is not the SEC's task, and they scrupulously avoid that. What they'd be looking at are the processes that take place to set the price, and then also the surrounding disclosures and particularly risk factors. Sure. So while I agree that we don't know what the SEC is investigating, what we do know is that this is a process that is relatively new. Its use by large companies is very new, and the entire review here will serve very well the markets and those who invest in these securities.
Mm-hmm.